Good evening, good morning, good afternoon, wherever you're watching or listening to us from. You're welcome to Stalker Team, the Investors Channel. Today, the 25th of February, 2025. Before we go ahead, we'll just make a disclaimer. Every information shared on this channel is for information and education purpose only. So, do your due diligence or consult your financial advisor before making any decision. And on that note, we welcome everyone to this channel. We thank you so much for joining us, for being part of this channel, for subscribing and putting on a notification bell. Also join our community on X. We are actually bringing the market information to you, the breaking news, the major information that actually moves the market. So, as you can see on your screen, it seems we are actually officially or unofficially in the bear market. And I'm going to bring some perspective to my topic today. And I also have a stock pick, which I promised I was going to talk about yesterday. The stock pick is not on Wall Street, it's a Nigerian stock. But I will be talking about that. But I will get into the topic itself. Then I'll also talk about the stock pick, and we close on that note. So we seem to be in a bearish movement, not yet a bear market. Bear market is actually very, very brutal, very, very quote unquote bloody, and very, very tiring. So yes, the market since last Friday has been on a downward move. As a matter of fact, if you have been checking your portfolio often and often, you might have actually, have lost, depending on what the value of your portfolio is, thousands of dollars. Some people have even lost millions or billions. But are we actually in a bear market? And is this actually going to continue, till who knows when? I'm going to be bringing perspective to what exactly is going on so that we try to understand what it actually means to be an investor, what it means to invest in the stock market, to actually have exposure to the stock market, because it's not necessarily for the faint-hearted, but it's not something that is scary as well. So if you really want to be an investor, you actually have to understand the psychology, the history, and the dynamics in the market. However, let me paint a better context. Just to be very, very specific, we are not necessarily in a bear market. Bear markets are very bloody. They could be very, very devastating. What we have at the moment is more or less as a pullback, or more or less a right sizing of the market. Because if you look at what has happened in late 2023, 2024, towards the end of 2024 and early this year, the market really ran very high. But let me go back in history and let's talk about the real bear market and what actually happened. So there was the Great Depression in 1929. So that was actually a bear market that happened when, that serious Great Depression happened, that, the global economy and especially the American economy actually collapsed. The Dow Jones Industrial Average, which is DJIE, which basically actually, covers the brick and mortar businesses and not just the financial services sector, but the everyday businesses that actually service the larger economy, the manufacturing sector. That index actually fell by 89%. And from its peak in 1929, it went to the bottom by crashing by 89% in 1932. The second bear market I'll be going back in history is the dot-com bubble that happened between 2000 to 2002. That was when a whole lot of businesses that had no business in technology or internet, they just added .com to their name and they listed, and everything actually burst when the bubble could no longer sustain itself. The Nasdaq, which was the tech index, actually crashed by about 79% from its peak in March 2000 to the bottom in October 2022. The S&P 500, the almighty S&P 500, actually declined by 49% in the same period. Now, that's another bear market. I'm going to be a bit fast with it so that we actually paint that context. In 2007 to 2008 recession, the S&P 500 declined by 57% from its peak in October 2007 to the bottom in 2009. So you could see that it lasted for about 2 years. Now, the COVID crash, which happened in March 2020, the S&P fell by 34% from its peak in February 2020 to its bottom in March 2020. So it was actually very short-lived, just within a month. But within that month, there was a huge bloodbath. There was a huge crash of the market. The Russian-Ukraine war of 2022, the S&P declined by about 24% from its peak. So now, what exactly am I trying to say? What I'm trying to say is that we are not actually in a bear market. As a matter of fact, the S&P 500 is still up by about 1.2% year to date. And in the last 1 year, it's still up by over 17 to 18%. So we are not in a bear market. We are just in a correction phase, in a right-sizing phase. A whole lot of the AI business, AI names have actually moved very, very high, very, very fast. I'll just show you that same chart I've been showing in the course of the last 1 or 2 weeks to actually show you why we are not actually in a bear market and what exactly you need to be doing with your portfolio. So as you can see, year to date, the S&P 500 is still green. It's still up by almost 1%. 6 months, the last 6 months, is still up by 6.2%. The last 1 year is still up by around 16%, just like I said. So we are not in a bear market. Bear markets are very, very catastrophic. They are actually preceded by very, very catastrophic events. Let me put it that way, for the lack of a better word. And we don't actually pray for any major disaster or anything that will affect the global economy. What we're actually having is a correction phase, and in the next couple of days, we actually see the market bottoming out. So what should you be doing as an investor? This is the actual most important part of my topic for today. What you should be doing is to look at the stocks that you have actually been eyeing, that you want to take position in. I mentioned yesterday, Alphabet, Google, the parent company of Google, is actually the most undervalued company in the Magnificent Seven on Wall Street in the tech sector. If you look at Microsoft, that stock has been beaten down badly. Tesla, yes, for people or for investors or shareholders who wants to actually take a medium to short term view of investing in Tesla. Tesla is now down by almost more than 60% now in the last 2 months. So Tesla is definitely going to rebound. It's not necessarily a stock you want to own for too long because of the dynamics of the business. Well, if we are going to be having a rebound trade in the next couple of weeks, Tesla is surely going to actually rebound. So I've mentioned Alphabet, I've mentioned Microsoft, I've mentioned Tesla, and more importantly, you can see that Apple has been green even since the market has been correcting, and that's why we keep on saying that Apple will continue to be the most valuable company on Wall Street, the most valuable company, at least in the next 4 to 5 years. Nvidia has actually really gone, has gone back to where it belongs to, number 2 or number 3. But Apple just has that staying power, that global network to make money from tech, to make money from smartphone, to make money from content and digital services. So if you don't have Apple in your portfolio, you could actually see that Apple continues to be more consistent, even in the correction phase. Berkshire Hathaway, the company of Warren Buffett, actually did over 5% yesterday when the market was actually in the red. Those are some of the most dependable names you can have in your portfolio. Come rain, come shine. Even if they actually correct to the market, they will rebound better going forward. Palantir seems to have corrected to about 85 to going back to almost $90 per share. My average price is still around 14-15, so I'm still way below the price today, and I wouldn't be buying now until I see something getting close to 50s and 60s, which might be unlikely, but let's see. Now I'm going to the stock pick just before we call it a day. Come with me. So the stock pick for today is Access Holdings PLC. Access Holdings PLC is a Nigerian transnational banking corporation with presence across Nigeria, across West Africa, in Southern Africa, in Eastern Africa, in Europe, and they also have operations around the Middle East. Access Holdings seems to have actually emerged out of a whole lot of series of acquisition, series of mergers, and also expansion outside of the Nigerian ecosystem. This holding company, this banking holding company or banking giant out of Nigeria has really been aggressive to actually build the real Pan-African and even to an extent a global banking operation. So Access Bank is the largest bank out of Africa by actually even in Nigeria by the total number of customers. So it's actually a very huge company, a huge bank. The company stock actually has been doing very well. Yesterday I talked about GT, that I was having to take a position in GT, and I'll be doing that for the next couple of months. I have initiated position in Access Bank about 6 months ago, actually since last year, and I've been my stake in this bank has actually done very well. So if you actually see in the last 1 year, over 24%, because of the fact that this bank keeps doing a whole lot of acquisition. So a whole lot of the what they actually pay to acquire these companies is actually being priced in. So I actually believe that in the next couple of years, by the time they stop the acquisition spree that they've been doing, this bank is actually going to return a whole lot of dividends and also profit to their bottom line. What I actually see is that it could actually be a very successful case of the real Pan-African bank, because even in South Africa that has a very strong banking industry, South African banks, apart from say Standard Bank that came to Nigeria and they joined forces with Stanbic, it seems that the Nigerian banks are actually the one that actually running that Pan-African business outlook. So the advantage of that is that this bank is able to actually do more revenue, and because they are actually exposed to a larger basket of currencies, their business is a bit more stable, and they could actually withstand a whole lot of shocks that they have within Nigeria. And that's why I really like this bank. I believe if the management can continue to actually deliver by reducing cost, because it seems cost for Access Bank is a whole lot compared to the likes of GT, which is the most profitable bank. But because of the fact that they are exposed to a larger market, a larger base, the cost actually, is something that they will need to work on over time. But be as it may, it is still largely undervalued. This stock, actually, the price to earning ratio, is just one. And almost the same thing with GT. These banks are actually trading for almost pennies on the dollar. So for me, it's a buy, buy. So that's for me. I have position in Access, I have position in GT, and I hope to actually swing those position back and forth to actually buy more of these two stocks for the next couple of months. Thank you so much for joining us today. If you haven't subscribe to this channel, please subscribe, put on your notification bell, join our community on X. That's where all the breaking news that you actually need to know about at Stocker Team Live on X. Join us. Thank you so much. See you tomorrow when we see. Keep investing and keep growing. Thank you. Take care and bye-bye.